Hello and welcome everyone. Thanks for joining us today. We're joined by Tony Rivera, Azure Minerals, Aussie-focused explorer, developer, with a little bit of Mexican thrown in, and Mike Jones from Impact Minerals, a prospect generator and explorer in Australia. Hello, gentlemen. Thanks for joining us. Before we kick off, I'd love it if you could give us an introduction. Tony, let's start with you.
Yes, certainly. My name is Tony Rivera. I'm the Managing Director of Azure Minerals. We formed this company about 19 years ago, and for most of that time we were exploring in Mexico. But then a few things came along which convinced us to refocus back into Western Australia. And so now we're very strong into developing a operation for a nickel, copper, cobalt project in northwestern part of Western Australia. And we also have a really good looking and prospective gold project as well. So we cover the commodities.
Hi, it's Dr. Mike Jones. I'm the Managing Director of Impact Minerals, also based here in Perth. Like Tony, formed Impact some time ago, 16 years for us. We've also been to a number of places around the world, but also find ourselves back here very focused in WA, looking for a range of strategic and battery metals that are obviously in much demand nowadays. They're early stage projects, but that's what we do. We're generally a prospect or project generator, always looking for partners to come in and work on our projects. So we've coming to the start of a very exciting time for the company. So.
Well, Tony, Mike, thanks so much for joining us. What we're going to talk about today is helping people new to investing in mining understand some of the variables to help their decision making make slightly more intelligent decisions, because the vocabulary is very different. The geopolitics is very different from other sectors, and I think there's lots of ways to get this right and there's lots of ways to get this wrong, and you've mentioned a few of them there already. We saw in 2020 and 2021, these were good markets with good momentum. It was almost hard to get it wrong. 2022 has been a little bit different. The geopolitics has changed. We've seen Russia-Ukraine situation. We've seen the continuing knock-on effects with supply chain. We've seen inflation coming in and impacting miners throughout the the growth phase from prospect generators through to developers. I would like to talk about some of those variables which people need to understand. I think you've mentioned one of them already, Tony, in the sense that you're an Aussie-focused company now, only because you're looking to divest out of Mexico. So, what role does jurisdiction play in all of this?
Jurisdiction is incredibly important because there are some countries in the world which are like Australia and parts of North America and that welcome mining and they encourage mining and they understand the benefits that mining brings to local communities as well as governments and the general wealth of the nation in which that mine is operating. And there are other parts of the world where they're not quite so welcoming and things change along the way. So, for example, with Azure Minerals, we went into Mexico in 2006, and it was one of the world's great mining jurisdictions back at that time. But over the last few years, things have changed a little bit. And what we've seen is that with new governments coming in and a much different agenda, where they see that there is that some of these, they perceive foreign companies to be, in effect, stealing the national treasures. And they put a lot of hurdles and make you jump through a lot of hoops to be able to progress. And so towards the end of 2019, we decided that Mexico was getting very difficult. So we started looking for alternatives, jurisdictions. And then COVID came along, of course, and we said, well, where can we work? Well, the best place for an Australian company is in Australia. And for a Perth-based company, the best place is in Western Australia. So that's where our focus became. And so we looked around and we were looking for projects which would be involve commodities, which we saw as being long-term value-added commodities going out into the future. And that would be your precious metals, particularly gold, and also base metals and battery metals for the new age of electrification. I'm sure we'll talk more about that later on. And as it happens, that only recently Mexico announced that they've nationalized the entire lithium industry in Mexico. And that's some news that has yet to really break around the world. And that involves several companies which will have lithium assets. In fact, one of them is a developed mine, will be taken off them by the Mexican government. So this just supports and confirms that you really need to make the right decision as to where you want to operate in an exploration and mining field. And for Azure and for Impact with Mike, we've found that Western Australia is probably the best place in the world.
I mean, Mike, what do you make of that? Because, you know, most people who kind of come on my show go, oh, we're operating in a tier 1 jurisdiction. Fraser Institute ranked number whatever, high up number. You should back us. And, you know, it used to be, I don't know, it was a whole page dedicated to it on their PowerPoints. And I kind of never really paid any attention to it. But in the last 2 or 3 years, it seems that even tier 1 jurisdictions have their own troubles in terms of First Nations and permitting and licensing, times taking longer and longer. So is there truly tier 1 jurisdictions anymore? Is Western Australia part of that?
It's all relative. And look, it's just getting harder to work anywhere in the world, even in the tier 1 jurisdictions. But I can tell you, I'd rather be working in a tier 1 jurisdiction like WA that's slowly going downhill and more difficult than somewhere like Mexico, where, as Tony said, they think that they're stealing stuff. And so, as you'll have seen just in the last couple of weeks, Consolidated Zinc were having their concentrate stolen off them in the front yard. So it's just getting too difficult and too hard to work in many places around the world. And to be quite frank, I think a lot of people who work in those countries talking rubbish about how they're finding being able to operate there. And I saw a really interesting interview, which you can Google, between Rick Rule and Thomas Kaplan. Now, for people that don't know, Thomas Kaplan's a famous mining billionaire, US. Interestingly, did his PhD, I think, in history at Cambridge. And he decided that silver was a place to be, and went out and discovered the San Cristobal silver and zinc mine in Bolivia, made his billions out of that. And in his interview, he said he is not investing anywhere in the world that is not tier 1, full stop. And if it's not a tier 1, he's not into it. And I was really taken aback. This is only 18 months ago, I think, when that interview came out. And when you look at it, around the world, one by one, the countries are just becoming more and more difficult to work in. We've got raging inflation in South America, increasing poverty everywhere, and we're getting more autocratic in Eastern European states, and so the place is just becoming basket cases to work in. And so, I think coming back to tier 1 jurisdictions is number one on the list, number very high, if not number one on the list, if people are going to invest in those countries, because long term, I'm afraid, and without wanting to be negative, it's going to be very hard for companies to pull off discoveries in those countries.
Well, if you've got things like nationalisation going on in these countries, historically good mining jurisdictions like the Mexico, etc., it gets harder to kind of pick your assets and work out where you want to be, because, as you say, historically it was easy to do business there. Do you think that's the case? It's going to be more difficult for explorers to think about, working in these different countries, or is it going to be easier if you're a developer or producer? I mean, you gave an example of a developer having the assets taken off them in Mexico, Tony. So, what should we as investors be looking at, and how do we, de-risk our investing?
Very much so. There are parts of the world where I'm sure if you have an operating mine, then you're in a better position than, say, being an explorer, junior explorer trying to operate there. But I can think of quite a few cases throughout Latin America and in recent times in West Africa as well, where the operating mines have been shut down because of the local population or even people from not the local population have blockaded those mines. And one of the world's largest copper mines down in Chile right now is shut down because of the blockades that are happening. So this is it's all part of this ESG, the environmental, the social, the license to operate, the community, and the corporate governance is coming in. And we need to operate under those ESG's principles wherever we are in the world. In some parts of the world, like Australia, it's quite well structured, and it's relatively straightforward in what you need to do to be able to have that social license to operate. But in some of the other countries in the world, it's not quite so clear cut. And you're trying to operate there, and you're almost like you're treading on eggshells because you don't want to upset anyone. But it is very easy to upset people, and that's why it doesn't matter whether you're an explorer, developer, or producer. you could well have problems in those sorts of countries.
So what role does ESG have, Mike, in all of this? I think Tony's been quite clear and saying we need, improved guidelines. We need to, mining broadly needs to improve its image out there. But there are protests. I attended one about a month ago myself in London. Protests against natural resource companies, people, very, very, very anti-mining. And this, in the same breath, we've got this "you go woke, you go broke" conversation going on. It's polarizing at the moment. So, what's your take on this ESG and the way funds are driving that narrative, the way that NGOs are driving that narrative?
I just wanted to ask first, Matt, which side of the protest were you on?
I was on the sidelines taking photos because I tell you why, because it kind of amused me. So all these people had come to London going, you could stop fossil fuels, having arrived there by car, bus, train, wearing clothes and using mobile phones, etc., all produced using fossil fuels. So I just, I was trying to work out what's going on, Mike.
I think. Being an explorer, I mean, obviously, ESG is important to everyone on a daily basis, and often a lot of the things that people espouse are really just good operating procedures and policies, in my own opinion. And so, but now you sort of have to more formalise that and pay more attention to promoting that part of the story, because people are becoming more concerned about the environment. Even the young people today, we're trying to get those people to invest in the industry. And so, they're looking at one stage, the planet's being destroyed by fossil fuels. What can we do? We're going renewables. And I think one of the problems with ESG is that the rush to get into it and the legislation towards it has outpaced by a long way the investment required to actually transform ourselves from a fossil fuel dominant, planet to one that is more renewable based. And a lot of the proponents of renewables have not really taken into consideration how much time and effort it takes to get mines developed in order to provide the metals that are required to provide this new future. Copper, and this is what Robert Friedland is always on about. People just can't comprehend the amount of copper and nickel that's going to be needed to allow this transition to occur. So we're in this unique space where funds for the big money are all driving. We can't invest in this unless you tick this box, and this box, because our investors will all get upset. Versus, well, hang on, we need to dig holes in someone's backyard. Otherwise, we're going to see even more price rises from here, because the demand is already set in stone almost for the transition to these metals to occur. So it's a very interesting time and a very good time, I think, to be investing in the commodity space for that reason. If you've got like a 10-year time frame, because as we all know, it's very volatile.
I mean, what about you guys are kind of early on in the mix, right? You've been sort of prospect generation. You've both got big portfolios, prospect generation, exploration. Do you get as affected by this kind of ESG narrative when you're having conversations with your shareholders, or you're going and talking to funds? I know, Mike, you're doing a little raise at the moment. Are they demanding that of you as early in the early stage, or do you think that's something that's kind of wall you're going to hit when you kind of move further up the advanced exploration or development stage?
As an explorer, you probably don't have the investors who are as invested in ESG as some of the major producers. However, as you grow and you progress from being an explorer to a developer, and then you want to become a miner, those same investors, those large investors, will start looking at your history, not what you're doing now when you want to build the mine, but what have you been doing for the last 5 years? What is your track record? And so you do need to take this into consideration at all stages of the exploration and mining cycle. And that's what we at Azure Minerals, what we have started to do over the last couple of years. And it's something, as Mike just mentioned earlier, a lot of what we do is actually just good practice, and we've been doing it for years. And so the boxes we're ticking are boxes that we've ticked for years and years in the past. You just actually have to have it formally documented in your annual report and various other means of expressing it publicly. And we do that. And so it's hopefully when the time comes, and so the much larger investors are looking to put money into our company to build our mines, that they will see that, yes, this company has developed a good track record and stuck to it and has performed well. And I might just say from the Azure Minerals point of view, is where our major project is in the Pilbara region of Western Australia. We're not very many kilometres away from where Rio Tinto blew up some caves. And that caused a huge ruction, not only in Western Australia, but around the world. And because we are in that same district and we are liaising with and dealing with and communicating with the same local people who were affected by Rio's actions, we have to be more than careful. We have to be very, very proactive in involving and engaging with the local traditional owners of the land to make sure that we don't do anything that is going to cause us some blowback in the future. And that's not only sensible from the point of view of we want to develop the project into a mine, but it's also just sensible from the community relations and the environmental point of view, because we want to operate properly.
Yeah, it's all a matter of just doing the right thing, and doing the right thing all the time. And a lot of those issues, they don't go away, but they're there and they're managed properly. So you go through the process.
So tell me this. You both do nickel. You've got nickel and copper as part of the portfolios. In your case, Tony, nickel, copper, cobalt, and in your case, Mike, you've got nickel, copper, PGEs. Does that in this again in this kind of environment, does that make it is an easier conversation with funders wanting to invest into that thematic than say the precious metal component of your portfolios? And if so, what does that conversation look like, or is it just more broadly it's mining? You've all got to follow the same rules before you get our money.
I think anecdotally, I've heard maybe over the last 6 months, people sort of saying, "Well, look, funds are kind of realising now that they're full of intelligent people." I know we sort of knock them sometimes, but they're full of intelligent people who've got long-range forecasts, and they kind of realise that these vast gaps in supply, are starting to look and emerging on the horizon, and they're starting to take a bit more of a practical approach. So we're saying, well, okay, if we want this revolution, and a lot of that's driven by the biggest overall concern, which is the move away from fossil fuels. So they're saying, well, there's kind of the lesser of two evils, having a small nickel mine, versus a giant coal mine, and which is producing, immeasurable tons of CO2 into the atmosphere. It's like, oh, well, this isn't too bad by comparison. So on that scale, as opposed to no mining at all. But as I say, that's not been affected, by me, because most of my investors are, speculative gamblers, but it's not been very fair. We've got a very good long-term portfolio, but as we've discussed before, Matt, at our end, talking about constructing a portfolio, we are really right at the bottom, the earliest start. Tony's had a fantastic discovery up in the Pilbara for nickel. He's in the sort of the advanced exploration development mode, so one step ahead, and then obviously we get the miners. So you put in the smallest amount of money and the most risk. The money you can afford to risk the most into a company like myself. Tony's a bit more of assured of a success from here, and I think the bulk of the money should go into the larger miners. But the larger miners, the investment in there is driven by these funds who are having to make these decisions between fossil fuels versus mining. And I think BHP, they've been criticised slightly because the timing wasn't great, but they've got out of the oil sector, by farming it out to Woodside. So all of a sudden they're more investable now to these bigger funds. So, it's an interesting trade-off.
Yeah, and Matt, I might just jump in and just add a little corollary to that as well, is that these days there's a big push to understand the chain of custody, or the chain of where the metals have come from. So if you're building a battery, where did the nickel come from? Where was it processed? Where was it mined? How was it done? And so there are now companies and organisations which are offering their services to demonstrate that your product has been mined using renewable energy, that has been carried on electric trucks to wherever, or all these sorts of things get looked after and acknowledged, and then that information is passed on to the end user who produce a battery, who put it into a Tesla, for example. So there's whole new industries of people opening up, offering us out their services. But it just makes sense, is that you do the right thing by the operation, by the environment, by the community, and by your investors, and you should do well.
Yes, it's kind of interesting actually that you guys almost need to understand the thematic in the future and direct your company there, and then the kind of investors, play catch up in a way. I think it's interesting. So like, there's lots of things that can go wrong, lots of things that you need to look at as CEOs of your business to ensure future success. I want to talk about the environment today. You've kind of, as we've mentioned Russia, Ukraine, we've mentioned inflation and the pressures that will put on not just people looking to build out plants and looking to raise big capex and seeing the costs rise, but even for explorers, drilling staff, drilling equipment, etc. It's all kind of gone up in price, but just as you are under pressure, so are retail investors. The disposable income seems to be going down, right? Energy prices are rising, food prices are rising, costs across the board are rising. Why should those guys not hoard cash, to make sure they've got money for a rainy day? Why should they invest in mining companies today rather than keep their money in the bank? I mean, you're cool, Mike. What do you think?
Do I eat or do I invest in impact? That's a very. I face that decision myself on a daily basis. That's why we put the money in.
Yeah, your G&A is very low. Yeah,
that's it. So look, you're right about that. All of those sort of things. But in the Australian, I'll be sort of specific really to the Australian market if I can. I mean, in the last 18 months, right now, people have never made so much money. There's been some incredible exploration success stories, and that's what we're trying to repeat. In impact. De Grey and Chalice, and people have made a ton of money off those sort of things. And so, notwithstanding the recent volatility, the market is awash. At the moment, we've seen 100 plus floats. There's capital raising that's being done, all day, every day, at the moment. And so it's quite clear that no matter what in Australia, we've emerged from the COVID crisis better than virtually every other country in the world. There's a lot of disposable income. People have made good money out of the mining sector. We know it's the bedrock of the country. I think one of the good things perhaps to come out of the COVID thing for Australia is perhaps, and I hope it lasts, an increasing recognition from the public that mining is actually a hugely important part to this country. It doesn't employ that many people in terms of percentage, but it's just the bedrock of what this country does, and so I'm hoping that goodwill will come over, as it goes forward. Now, obviously, overseas where things, inflation's a lot worse and disposable incomes are different things. The last thing they should be doing is investing in a speculative, stock like ourselves. It's like they should be putting the money into a dividend-paying miner, accept the volatility that investing in commodities brings, but BHP will continue to provide a dividend for the next, decade or longer. Who knows how long it's going to be around. So that's where they should be putting their money if they have got the money available to invest in the mining sector.
What do you reckon, Tony?
One of the other aspects, and you briefly mentioned on it, is that the shortages that are out there, potentially mostly caused by the border interruptions due to COVID. But one of the major issues that we've had here in Australia is a lack of people, because there's about 500,000 people a year come into Australia on working visas, and they haven't come in for the last 2 years. And so we are very, very short of people. So that in itself sends wages up, and it's an inflationary pressure as well. That doesn't matter whether it's geologists or whether it's people working on the drill rigs or people working in the analytical laboratories or all throughout the industry. And extensions of the industry. We are just so short of people, and it's crying out. And then in addition to that, of course, with COVID, you're getting people becoming ill and staying home, and there's shortages in that respect as well. So we really do need more people to be coming into the industry. So and younger people are the ones we want. So we want to encourage people that mining, or particularly younger people, that mining is a really good business to be in. It's a good, steady income. There's opportunities to travel around the country or around the world, and you're, if not secure, it's probably one of the more secure industries to be in. And we'd just like to see more people. So I'll put a call out to all the the viewers of the Crux interviews and say, if you're a geologist or an engineer or something, come out to Australia. We're looking for people.
We are. And I learned today that recent mining engineering graduates, depending on where they're going, are earning, wait for it, $200,000 for new graduates. It's absolutely astonishing. And there's a corollary of that is that if you understand, studied inflation a little bit, and I've only done a little bit, but wage inflation is actually one of the biggest drivers of inflation overall. And once wage inflation starts, so over the years we've had price inflation for products and services, so for products in particular, and obviously as technology improves, the cost of goods has generally been coming down because it's cheaper to produce colour TV now. It's got better thematics than the one 10 years ago. Okay, but it's wage inflation. Once that starts, and it's really starting here in Australia now, paying graduates $200K, then eventually everything has to go up. And once you've given somebody that salary, it's very hard to bring it back. And that's what drives the big wage inflation. So you're seeing that in the US now. They can't get people to work for them. So wages in McDonald's have gone from whatever it is, $8 to $24, and eventually those things push through. And that inflation is very hard to stop. And that's where the problems, I think, are going to start arriving, one by one around the world. The countries' inflation rates are going bananas. Turkey was first, Chile, Peru, Argentina, which is not a surprise, and and so on and so forth. And as people have talked about, as the debt is so high, you can't actually put interest rates up too much before bankrupting the whole world. So it's very interesting.
Well, let's come back to it. Tony, I'm not going to let you off the hook, buddy. The question was about investors and disposable income.
We didn't get let off the hook.
Disposable income, right? Because what does that tell? Does that inform us? If wages are going up across the world, does that say to investors, look, those companies wouldn't be paying those increased wages if there wasn't a big demand for it and a scarcity of those skill sets? Does that say actually mining is in a good place at the moment, or should we be worried that margins are being squeezed? I mean, what's your call?
Oh, I don't think margins are being squeezed at the moment at all. I think that those companies which are actually in the producing phase that are making a product, the margins, because the metals prices are so high, whether it's iron ore or base metals or precious metals or things like lithium and that, the margins are incredible. So those companies are making a lot of money. And the big producers are distributing their profits mostly back to the shareholders, and the shareholders are actually doing very well out of those big companies at the moment. And so what do they do with their money? Well, they usually turn around and probably put it back into some other investments, and hopefully it filters down to the mid-size and junior end of the market where Impact and Azure are operating. But if you've got a bunch of money and it's sitting in a tin box at home, and there's inflation happening as we're seeing now, your money is depreciating in value. So you might as well put it somewhere, and hopefully it's either going to be pay you dividends from a big company like Mike suggested, or it's going to go into a more speculative company, and they're going to make a big discovery, and you're going to get 10 times your money back.
Okay, so I buy that. Now, this session is for people new to investing in mining. It's beginner's guide to conversation here. You guys have come out of prospect generation, small exploration players. You've been at it a long time. Why should someone new to mining have your sort of company in their portfolio? Because I'd love your take on how you build a natural resources portfolio and what the different moving parts should be, and maybe the weighting of each. I mean, Mike, why don't you kick off?
Yeah, sure. Sound like I know what I'm talking about with portfolio management, but the bulk of it's all about the
investments can go up as well as down. Mike, you start with that. It's always a good start.
That's right. Yeah. It's all about risk management, and it's all about how much money you risk, say, on each trade, or each investment. And so one of the things I think people should strive for is to have sort of equal risk in equal parts of their portfolio, so that you sort of, you're not over leveraging or over risking in the more speculative parts, which is what people tend to do. I've done it over and over in my career, because I'm sure these stocks are going to tenfold, and of course, they don't in many cases, because it's exploration, it's high risk, you're against Mother Nature, and she's a bitch, so she's often against you. And so look, if you wanted some figures, you might have, say, and it sounds like it's a large number, say 60% in BHP, you might have 20, 30% in a developer, maybe a little bit further along than where Tony is right now, and then 10% down in the company, like Impact and that very speculative thing, because then you'll find that the overall portfolio volatility will be kind of balanced out. Remembering, of course, that the commodity sector is one of the most volatile sectors of the entire market, so you still need something outside that to kind of balance even that risk. So that would be my sort of rough figures. There have been times in my career when I've been completely inverted on that and paid the price for it. So,
and Tony, what's your risk appetite?
Well, I have a very high appetite for risk, which is why I'm an exploration geologist working in the exploration industry, and I love making discoveries. And I've been part of either personally or teams that have made good discoveries that have become operating mines. I guess probably the best of the ones that I was ever involved with was probably about 20 years ago, and we found the highest grade nickel mine in the world called Cosmos, and the Jubilee mines went from being a 10-cent stock to being taken out for $23. I went from like a $15 million market cap to a $3.2 billion takeout. So these markups can happen, and they happen more than people realise. So just with Azure Minerals, my company, about a year and a half ago, we made the nickel discovery, and we were trading at around about 5 cents, and all of a sudden we're over $1. Now we've come back a bit since then, but so those are the sorts of markups that can happen. So if you have a weighted portfolio, it can be weighted between the producers, the developers, and the explorers. But you should also not just have one explorer in there. You should have several across the board, and you might be going into different companies with different commodities. And if one of those has a good success, then all of a sudden you've got 5 or 10 or 20 times your money back.
So talk to me about that. That's kind of interesting, because quite often we see there's very angry discussions going on in chat rooms where people take polar opposite views on an argument, and that they're equally determined and they're equally right in their minds. So you guys need to manage expectations in a way, because down at this end, as you say, portfolio approach is the right thing for you guys, because not everything's going to work out, everything's going to work out in the same time frame. So you need to manage the expectations of your shareholders. I mean, Mike, you're a prospect generator, right at the coalface, as it were. You're the guy that makes the discoveries for, well, obviously Tony's done it as well, for future producers. But now, in this moment, you've got to say to investors, right, you need to think about it like this. You need to be this type of investor, and it should only be a small part of your investment thesis, because it's more likely to go wrong than right. But if it goes right, oh boy, you can make a lot of money.
You've kind of given the answer there in a way, Matt.
Okay, next question. No.
But managing expectations in a junior is one of the biggest things, because we're as Tony said, the excitement of exploration geology, is the thrill of discovery, and we want to share that excitement with people about what we're doing. But you can't overpromise. So there's always a balance between, hey, look, this is what I believe. You're giving me your money because you believe in me, and as long as you believe that I'm doing the right thing and I'm spending the money wisely, or I'm tackling the right thing, then we can all go along for the ride. But if you do that, if you over promote too often, or tell this drill hole's going to be the one, this is going to be the greatest thing since sliced bread, then eventually you lose your credibility, in the marketplace. People have done that, but Tony and I'd like to think that we've done the right thing over the years, even though we haven't had the great success yet that we've both really want. I think Tony's on the verge of it there, and with more work. We're long-serving managing directors. We've been here for a long time, because people understand what we're trying to do, and they're happy to keep backing us. If the directors or the major shareholders didn't want us to do that, they'd be knocking us on the shoulder and saying, can we have a change of plan? And that's certainly not been the case.
And if I look at the markets at the moment, I think you guys are okay, actually. But if I look at most share charts, at the moment. Last 3 weeks, 4 weeks has been a bit messy. Markets are a little bit all over the place. Messages being sent by US Fed, by, again, to keep mentioning the situation in Russia and sanctions, and how the different commodities are reacting to that. It's all driving the price of metals up, which is good news, but you kind of got this disconnect between the equities and investment in the equities for miners in relation to price out there. What would you say, again, to this new audience looking in, as to how quickly things change? You've been through a few cycles. Markets calm down and eventually things kind of get back to where they were. But people are expecting some sort of hockey stick type response from the market. Do you think that's a reality, or is that just wishful thinking by promoters? I mean, how do you look at it, Tony?
I'd say that there for a long time there was a good correlation between the price of the companies, the equity price of the companies, and the metals prices that were out there. But as you've said, the metals prices have gone up a lot in the last 12 to 18 months, and equities have not followed them. And so there is a bit of a disconnect at the moment. But that connection will be re-established. Now, that will either be that the equity in the companies will increase, the company's prices or values will go up to match the metals prices that are out there, or the metals prices will come back a bit. But that correlation will be re-established at some stage. But just looking at metals prices at the moment, it's hard to see them coming back too far, because particularly the commodities which are being used for battery metals and electrification processes and decarbonising our activities going forward, all that is crying out for is that more and more material is going to be needed, more and more metals are going to be needed. And if we can't find more and mine more and put more into the market, then the prices are going to rise. And as the companies that produce them, the prices of the companies that are producing those metals, they will in turn rise as well. And then in time, the developers and the explorers follow that up as well.
There's a great graph, if you Google it. It's the relationship between the S&P and commodity prices, dividing one by the other. And it's quite clear that we're at a turning point, in a major shift towards the commodities being, the place to invest. And that makes sense when you've got inflation. They're hard assets, at least supposedly maintain their value or lose their value less, as inflation takes off. And so there are all of these things being, driving in that supply and demand side. So we haven't invested in the industry enough. Demand is increasing on average 3 to 5% per year. That means every 12 years, the amount of metal we need, it's got to double. And in that time, we need to mine all the metal that was discovered prior to that to get to that same level. So it's the law of compounding. So the next 10 years could actually be quite spectacular, because despite all the short-term volatility that we're seeing in wars and things, the world is still growing. There are still things to be built, and that's going to continue. But it's not going to be a hockey stick. We're right now in one of the most volatile periods ever. We've got the wars going on. But, China at the moment, metal prices reacting to the Chinese lockdown, that's clearly short term. It's not going to go on. Eventually people will come out of there. A war in Ukraine is going to drag on for, that's a major geopolitical turning point. But Chinese demand will return, it's, without a doubt. So, but it's not going to be a hockey stick, more of a sort of squiggly worm, like a snakes and ladders thing that's kind of hopefully going up to the top. But don't land on 99 and come back all the way to to 1. Yeah.
Okay, we've got the little SOM curve and the squiggly line curve. I think. Well, no, look, I like that kind of measured response and the measured approach to what the future looks like. I think talk of hockey sticks is rare and probably shouldn't be part of most conversations. So I do appreciate what you're saying. Why don't we, chaps? So look, lots of topics discussed there. They're the beginning for people new to investing in mining. These are some of the topics that you should go and investigate and look at and try and understand before you place your bets. And invest your money. So guys, I'm going to let you maybe, I'll start with Tony, just say, Rick, in your opinion, why people should be looking at your company in this environment, and why the timing's right now. And then Mike, you can do the same when Tony's finished.
Okay, in the sort of the broader scheme of things, and as I mentioned earlier, with the global push for electrification, decarbonising, getting away from fossil fuels, etc., we need certain commodities, certain metals, which are used in batteries and in being able to transmit electrical power from one place to another. So that's your nickel and your copper and your cobalt in one end of the batteries. It's your lithium and graphite in the other end of the batteries. These are the things that are going to be needed in much, much greater proportions going forward. And we will need already. There was a report out today saying if all of the electric cars that were being built, that were wanted to be built this year, were built, we would need twice as much metal as we are actually producing right now. So we do need those extra to mine those materials. And as far as Azure Minerals goes, we're located in Western Australia, which is a tier 1 mining district around the world, absolutely. And there's a lot less, almost no sovereign risk here compared to other places around the world. We have here in Western Australia some of the great mineral deposits and the mineral prospectivity that can be found anywhere in the world. So all of those metals and materials that I mentioned earlier that you need for batteries and electrification are found here in Australia. And for Azure Minerals, we have some of those under our control. And we have a project called Andover in the Pilbara region of Western Australia, where we are currently both doing exploration and resource definition drilling, but we're also in the development stage, and we're carrying out our scoping studies and our pre-feasibility studies right now as we speak, with the intention of going forward and building and operating a nickel, copper and cobalt mine in an area which is one of the great mining provinces of Australia. So our company is in a very strong position at the moment. We're well cashed up. We've got a great project which we can see on a pathway to mining in the near future, and we're going to be pushing that forward as fast as we can.
That's great, Tony. You've actually said half of what I needed to say. So because we're also in tier 1, and actually I think WA just came out number 1 in the Fraser Institute study.
All right.
In the last couple of weeks. Yeah, so we're definitely in the right place. Cash is very important. That's why we're doing, Matt alluded to, we're doing a rights issue right now. We think that the early stage portfolio of the metals that Tony's described that we have our projects for, it's a fantastic opportunity now for all existing shareholders, and those who aren't can buy rights. It's a renounceable rights issue. They can buy those rights on the market over the next few weeks and participate in our offer. And my strategy is to fund my company for the next 2+ years right now, and that's quite a lick of exploration to get us through these volatile times and give that opportunity to the current shareholders. And hopefully we won't have to raise any money in the next couple of years. Obviously, we get a discovery, that's a different story. We can always raise money when you've got a discovery. And now is the time to be looking at impact and what it's doing, particularly over the next 2 weeks while the rights issue is open. So so look, it's a great place to be. There's lots of activity going on. We're drilling at the moment. We had a sniff of success in our last drill hole. We start drilling again on Friday, so hopefully something exciting might happen in the next few weeks. But it's a great time to be in a tier 1 jurisdiction in Western Australia. It's been one of the great places to be the last couple of years, for sure. So having said that, Matt, I'll be in London in a couple of weeks, so maybe we can catch up.